Good afternoon, traders. Welcome to the More Analytics Afternoon Energy Podcast for December 29th, going into the 30th. Hope everybody had a good weekend. Okay, we're going to start off with the natural gas. Sorry, I should say the Fed contract right there. Have that on Fed down here, right? Okay. Okay, I warned in the post-market synopsis on December 5th. This went out warning of pressure. It came off $1.49.2 from the 528.90 close. Number of other bearish formations in here. Those are all on hold. And then on December 23rd, we left a minor bullish reversal below. Decent trade above this formation right here will warrant a decent strength. That's going to come in at 396.80 through tomorrow. Bear with me just a second. Decent penetration in there overnight. It's going to be 71 ticks. After the open, it's going to be 63. So although this is 60 ticks on the nose right there, that was actually the intraday volatility had expanded a bit. Nonetheless, if we fell back down through this line decently, it should bring a decent pressure. That's going to come in at 396.80, as I said. Okay, and the crude oil. I'm not going to go over all the higher time frame stuff. The trade back below 58.22 brought in $1.33 of pressure down into here. We bounced off these lines right back up to the line and rejected it off a little bit. If we take out this formation above right here, which is going to come in at 58.49 minus 0.4 of a tick per hour starting at 6 o'clock p.m. Eastern Standard Time, that's going to warrant decent strength for $1.90 minimum, $7.20 plus maximum. We break above there decently and back down through it decently, look for decent pressure to come in. You take out this line right here decently, that's going to warrant decent pressure. That's going to come in at 57.17 plus 1.2 per hour starting at 6 o'clock p.m. And that'll project this downward at least $1. If we break below there decently and back up through it decently, look for decent short cover to come in. And the RBOB left a minor bearish reversal above on Friday. We traded back up into that gap and rejected out of it here. We did have that bearishness, but then we had bullishness because we broke back above this line today, which brought some of the strength up to here, but now we're rolling over to test that again. The trade below this right here at 174.13 brought in 3.66 cents of pressure. That was put on hold. The trade back above 171.75 right here. I said now warrants of strength. We've seen trade up to 174.51 before rolling back over to it again. We fell back down through that line decently. That'll warrant a decent pressure again. It's going to come in at 171.98, excuse me, 171.97 plus 1.4 per hour starting at 6 o'clock p.m. Decent trade above this line. Above either of these lines is going to be bullish. This lower line is going to come in at 175.03, and the upper line, which is more important, comes in at 175.65. Both of those decrease at 2.5 ticks per hour. And the trade above the upper one will project this upward at least 5 cents with the maximum at least 2 or 3 times that. Heating oil left a minor bearish reversal above on Friday, tested up into that gap, rejected out of it. Just want to check something on that RBOB. Then the heating oil, trade back below 215.38, brought in 5 cents of pressure before short covering off the low, and we're rejecting off that line again right now. Decent trade back above that line is going to warrant a decent strength. That's going to come in at 213.75. Minus 2.5 per hour starting at 6 o'clock p.m. I would caution we may be in the last stretch of this move down from the highs. If we take out these lows here with possible exhaustion levels down here, 208.15, 205.06 and lower. Maintain gap higher tomorrow. We'll leave a minor bullish reversal below. Tomorrow has a good likelihood of seeing range expansion in the Brent. 1226, we left a minor bearish reversal above. Decent trade above this formation right here, which is going to come in at 62.09. Minus 0.5 of a tick per hour, starting at 8 o'clock p.m. Eastern Standard Time. We'll project this upward. $1.90 minimum, $7 plus maximum. If we break above there decently and back down through it decently, look for decent pressure to come in. Decent trade below 60.56, plus 1 per hour starting at 8 o'clock p.m. We'll warn of decent pressure for $1.25 minimum, $2 plus maximum. Decent penetration in there is going to be 36 ticks overnight and 34 ticks after the open tomorrow. Gas oil. Maintain gap higher tomorrow. We'll leave a minor bullish reversal below. We did leave a minor bearish reversal above here on Friday. The trade above 610.25 brought in 15.75 of strength. That was put on hold. Like I said, we left that minor bearish reversal above. Decent trade below 609.57. Plus 4 per hour starting at 8 o'clock p.m. Eastern Standard Time. We'll project this downward. $25 minimum. $35, $40 plus maximum. If we break below there decently, back up through it decently, look for decent short covering to come in. Tomorrow, the RBOB is likely to be the weakest, the heating oil in the middle, and the crude the strongest of the three relative to one another. I don't often go off into the spreads, but I'm going to for a minute here. I would note that this June Dece did resume bullishness here. Okay, thank you for watching. I hope you have a good evening, and I'll see you on tomorrow's podcast.